Hello, I'm Jonathan Noyes, Head of Investment Research at Wealth Club, and today I'm with Mark Symington of Octopus Investments to talk about the Octopus AIM VCTs. Hello, Mark. Welcome to the studio.
Good morning, Jonathan. Thank you very much for having me. I'm delighted to be here.
Very good. So we're here to talk about the AIM VCTs.
We are.
What are they?
So the AIM VCTs are, as the name suggests, two venture capital trusts investing almost exclusively in AIM-listed high-growth businesses. If we go back, just a quick explanation of the histories and why there are two. The Octopus AIM VCT traces its history back to 1997, and the Octopus AIM VCT2 traces its history back to 2005. However, since 2010, the VCTs have been investing alongside each other proportional to their net assets, which is around 60-40. And so for the last 15 years, the portfolios have been getting more and more similar to the point where we are today, where the portfolios are almost exactly the same. It's just a few historic differences in weightings across the board. That's the history. They've been managed by Octopus Investments since 2008. I'm sure you're familiar with Octopus Investments, which is founded in 2000. It's a founder-led boutique asset manager with over £10 billion under management in a variety of asset classes, from private equity to renewables, venture capital, and of course, quoted company investments, which is the team that I find myself sitting on today.
And so you're new to the studio, Mark. What's your background? What do you do at Octopus Investments?
So I've been at Octopus for 13 years. I've spent the last 12 years as part of that quoted companies team, investing predominantly in AIM. I am the fund manager of the Octopus AIM VCTs alongside two colleagues who are dedicated exclusively our time on AIM VCT investments. But we're a very, very large team of 11 professionals. We believe at the moment we're the largest investors in AIM. So we've got a great amount of experience in the sector. We've seen it all before. We've been managing these products in some cases for over 20 years. So it's been personally fantastic for me to be able to draw on all of that experience and in shaping myself as a fund manager, particularly an AIM VCT manager, which is a specialist area. And it's been a fantastic 13 years.
And how's the team finding investing in AIM at the moment? Because I guess the past 3 to 4 years have been a real challenge. I guess over that history, you've seen the peaks and troughs of AIM.
You're absolutely right. There's no denying the last 3 years on AIM have been challenging. Coming out of the pandemic, it feels like we've bounced from one macroeconomic headwind to the next, which has made, in particular, UK smaller company investing difficult. Right? We're in a risk-off environment. Investors are looking elsewhere, including towards the US, for example, and that's made life challenging on our end of the market. We are incredibly optimistic, however, about AIM. It's a fantastic growth market. It remains Europe's biggest growth market. It celebrated its 30th birthday this year, and we still feel it's absolutely right at the heart of the UK government's growth agenda. And we feel very well positioned for that sort of thing to happen again when market sentiment turns.
So Mark, turning to investments, what sort of companies are the VCTs looking to back?
Well, it's worth mentioning that as AIM VCT investors, we are sector agnostic. We have to have the ability to react to deal flow as it comes to us on AIM, as purist AIM investors like we are. However, the VCT rules tend to favor companies that are a bit more IP rich, a bit more technology focused. As a result, you'll find a lot of businesses in the software and computer services sector, for example, in our portfolio, relatively overweight, though not on purpose. We see ourselves very much as bottom-up investors. We're investing in great management teams with a niche product or service in a growing market who themselves can deliver market share growth. We find that those combination of things, when they work together, you can find some very powerful investor returns over medium to long term, and that's what we're looking to achieve.
Typically, how are you finding these investments? Because I guess you've got to invest within the VCT rules. Are you waiting for deals to come onto the market, or are you proactively going to companies that are already on AIM and saying, look, let's raise some extra capital?
Absolutely, a bit of both. So as you would imagine, the relationship that we have with the broker networks is incredibly important. We keep a very, very close relationship with them. We're always happy to do what we call early looks. So entrepreneurial businesses who speak to advisors and brokers and are considering an IPO eventually on AIM for their business. Those brokers tend to like to do a few early meetings with investors like ourselves, patient capital investors who are going to be on the share register potentially for many, many years. They bring those sorts of businesses to see us early in the process of an IPO. And that's beneficial because we get to sort of get our hands around the businesses that we really like. We get to advise them on what they need to do, what they need to achieve in order to get to that point of IPO and beyond, and what's going to make them successful as a public company. And so that helps us with the relatively shorter visibility that we have on deal flow as an AIM VCT investor, is what we call those early looks.
I was just going to touch on pipeline. I guess with that early look,
Yep.
the pipeline, I must say, the past year or two within AIM, it's been pretty dry for IPOs. How's it looking now? Any green shoots appearing?
There absolutely are green shoots, I'm delighted to say. Sitting here with you today in December 2025, we've actually got an IPO which is coming in about a week or two's time, which we're participating in, which we're very excited about. And actually, you're right, there's no denying that the IPO activity over the last few years has been disappointing and a bit muted. We'd love to see that changing. From us as AIM VCT investors, the deal flow has been more than sufficient from existing AIM companies, whether they're in our portfolio already or not. So there's already a rich pool of fantastic growth businesses to tap into on AIM as AIM VCT purists. But we're absolutely excited to see a little bit of green shoots, to borrow your word, in the IPO market. We'd love to see that continuing. And I think some of the changes that have recently been announced on the VCT side in terms of limits will certainly going to help that.
And so turning to some recent examples of companies you've been backing in the VCTs, there's always some good examples from you guys.
Sure. So a very recent example, which we can go into, which we just added to the portfolio last week, is a company called Quantum Base, based up in Lancashire. It's a fantastic sciencey and technological-based story. They use the unique properties of quantum physics in a proprietary material to create tax stamps that are absolutely unique and cannot be replicated. So they've signed a contract with De La Rue, the printing business, who's recently themselves been acquired, but was absolutely a fantastic key customer to take on for them, just demonstrating the value in the technology. Counterfeiting.
De La Rue, they make
notes, passports, tax stamps, all of those sorts of things, all of which are suffering from counterfeiting. In fact, counterfeiting is a massive problem in almost every industry. And Quantum Base has this physics-based approach where it looks like a little QR code, essentially, which can be read with any smartphone. So any operator can go and use a smartphone to check the validity of their stamp on any product, including they've got a growing interest from the art sector, where counterfeit art is actually becoming a problem in resales. Just demonstrating the broad depth of places that they can go and look and put this product to work.
And any other examples?
Sure. I think one example, which is a brilliant one for an AIM VCT investor, is Craneware PLC, which is based in Scotland. It's a software provider into US healthcare and US hospital industry. The US hospital ecosystem has got a sharp focus at the moment on cost reduction and revenue generation. That's exactly what Craneware helps with. They help with monitoring costs, margins, revenue generation, reimbursement, all of those sorts of things in a very complicated environment. And they allow hospital operators to really drive those margins and to improve their profitability. Now, Craneware traces its origin back to 1999, where it was founded. And in fact, one of the co-founders remains the CEO today. I was looking into them just a few days ago, actually. Fascinatingly, they signed their first US hospital client a few months after founding in 1999. Fast forward to today, they count over 40% of US hospitals as clients, which is an absolutely fantastic achievement for a business based in Scotland. We think they're only just getting started on that growth journey. They have over 225 million US in revenues and around 50 million US in profits. They're cash generative, fast growing, and they've recently been putting out some very, very good outlook statements where they are quite confident in delivering double-digit top-line growth going forward. So we think not only operationally are they performing fantastically well, but also they're building a strategically very, very valuable business with the foothold that they have in that US healthcare space. So fascinating business. And as I said at the beginning, it demonstrates perfectly exactly what it is we're trying to achieve as AIM VCT investors. They IPO'd on AIM in 2007, and Octopus has been invested since that time. And it's truly transformed itself over those years, and that's exactly what it is we're trying to replicate every time we make an investment into the AIM VCTs.
And so turning to performance, it's been a really tough last 4 years or so. Maybe you could just break down the key drivers of that performance and what's gone wrong, what's gone right. We've had a few examples there.
Sure. Absolutely. There's no question the last 3 or 4 years have been challenging. We're very much in a risk-off environment, and UK smaller companies are really feeling the brunt of that, undoubtedly. What gives us great optimism is the fact that AIM is still home to fantastic growth businesses. Now, for the last 3 years, those businesses have not been valued properly. Very clearly in our views, ratings have fallen to historic lows, despite earnings growth continuing to grow very, very nicely. So that gap between profitability growth and rating has widened over 3 years. And we think unfairly. That's a market challenge rather than a challenge for the underlying investments. So for the stock picker, for the bottom-up investor like we are in the Octopus AIM VCTs, it's actually delivering quite an exciting opportunity to add new portfolio names at attractive valuations.
So Mark, turning to risks, I guess that really highlights some of the risks involved in backing an AIM VCT, is that you're exposed to the market and sentiment on the AIM market. Would you say there are any other risks with your VCTs?
What I would say, yes, of course, we are vulnerable to market sentiment. It does, on the positive side, allow us to offer, to have access to a great amount of liquidity within the portfolio, and that's demonstrated with a number of exits that we make year on year at good profits, which itself helps us to maintain our dividends and our buyback policy. So that's a double-edged sword, I would say. It's also worth mentioning that. One of the key features of an AIM VCT is the fact that an investor can get day one access to a relatively mature portfolio of businesses. In terms of the Octopus AIM VCTs, approximately 2/3 of our portfolio is actually invested in profitable and self-sustaining businesses. So it's worth mentioning, I think, that while we are exposed from a public market level, it also offers key and unique benefits too.
So Mark, you've just done an excellent job of summarising why an investor might want to back an AIM VCT, but maybe there's a few extra points you'd like to throw in there. For investors who want to back an AIM VCT this year, why should they be backing your VCT?
Sure. Well, I think deployment has been particularly strong. We would love to see some more IPOs coming into the market, but there's plenty of excellent deal flow around on AIM at very attractive valuations, which I think is a key part of the messaging. We think that's going to be massively improved as well by the recent changes to the VCT limits. I think it's going to have a really revitalizing impact on our investable universe. And again, valuations right now are very attractive. At our end of the market, VCTs, such as the Octopus AIM VCTs, are really able to go in and help price the deals. So we can be very keen on valuation, which makes, I think, an AIM VCT in a very exciting place to look at right now.
Mark Symington of Octopus Investments, thank you very much.
Thank you, Jonathan.
If you're watching on YouTube, please press like and subscribe to the channel for more.